Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to trade HIMS and HERS. And yes, this stock has presented itself with an opportunity, or is it really? If you're new to options trading, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be going through a stock that has been trending for a very long time, and what I think, in my opinion, has presented itself an awesome opportunity. I'm going to go ahead today and I'm going to give you a step-by-step walkthrough of what I would do with the opportunity that has been given. Now, for those of you that are trading with small accounts, I have not forgotten you. I will give you a strategy that can work if you're trading with a small account as well. Remember, I too also started off with a small account. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. So we're going to go ahead and we're going to go to trade HIMS options down to the bottom in order for us to open up our options chain. Now, this area down here is known as the option chain, and all this information down here gives us enough information in order for us to make a very informed decision. Now, before we get into these option strategies, I always have two requirements for my viewers and also my subscribers. Quite simple requirements, if you ask me. Requirement number one is going to be always make sure to do your own due diligence before investing, because what might work for my portfolio, quite frankly, may not work for yours. The second requirement is that always make sure to have an exit strategy before entering any of these option trades. That way, if the trade decides to go against you, then you know how to get out of the trade. That being said, let's go ahead and continue to this video. So we're going to come back to the option chain in just a second, but I want to go ahead and show you the opportunity that I think HIMS has provided. So let's go back to the stock. And what we're going to do, we're going to go to this advanced feature right here with Robinhood, and that's going to allow us to open up the chart. Now with the chart, we're going to go ahead and we're going to go to the 1 year outlook, which is right here, 1Y. Good. Now, what I want to bring to your attention is the current price where HIMS is trading right now. I'm also going to show you a level of support that is needed for one of these option strategies. So if you were to put your line right here, you could see that HIMS is actually trading at $43.21, which is not bad since it had a very severe drop from the price of around $63. So from $63, it had a severe drop to around $43, which represents a $20 drop. Now, in my mind, I think this is an excellent opportunity. I do make a lot of these videos whenever these opportunities present themselves. So if you guys want to continue getting these kind of videos, now is a good time for you to go ahead and subscribe to the channel. Now, I made two prior videos before this. Go ahead and check out the Trade Desk video and also the United Health video. Those two stocks as well gave us a very good opportunity. I showed you the strategies I was going to be using on it, and I showed you how I profit from those strategies. Now with HIMS, if you were to go down and you put a straight line right here, you're going to be seeing a line, a clear line of what's known as support at the $40 mark. It does says $40.20 or $39.99, but we can't wrap our mind around that. We usually like solid figures. So clear level of support around the $40 mark. Now, what that tells you is that if the stock were to drop any further, it's going to come down to around the $40 mark. Now we're going to go down a bit lower and draw a line right here to the top right here. You can see there's a level of support here, but this is what's known as not a strong level of support because there's only one part that this hit the line. It's only one time. If we go down further, like right here, this is known as a strong level of support because you can see the graph hit the line several times, one, two, lots of times. So if HIMS were to go further down from the $40 price, it keeps falling. There's a strong support at the $34, $35 mark. That means the stock is going to go to $35 if it continues going down. Now, even if it goes below the $35, there's a very strong possibility that it reverts back to the $35 mark. So the $35 are very strong support as well as the $40 mark. Now, how do we use this information in order to make a very informed decision of what option strategies we're going to be using? So let's go ahead back to the option chain right now, and we're going to get into those strategies. So let's go trade HIMS option once again. Now, the first option strategy I would use with this because it has a very good opportunity. I'm going to go to sell I'm going to go to put, and now I'm going to be choosing a strike date. Very importantly, the strike date I'm going to be using is going to be July 25th, which gives me 30 days to expiration. The reason I'm using the July 25th, the reason I give myself 30 days is because the stock is extremely volatile right now and no one knows what's going to happen. Whether this stock is going to go up, whether the stock is going to go down. But based on my due diligence, I think 30 days is enough time for this particular option strategy. The reason I stress this particular option strategies is that you're going to see with the other option strategies I'm going to show you that can be used on HIMS, you're going to have to change the strike date. So let's go ahead now. We're going to go ahead and we're going to select a strike price. The strike price we're going to go with is going to be below the share price of 43.21. Now, I'm pretty sure you guys know what strike price I'm going to go with because you guys are very smart investors and traders. So the strike price I would be going with is, if you guessed it, you are correct, the $40 strike price. The reason I would go with a $40 strike price is that I just showed you it has a very clear level of support right there. Now, with the $40 strike price, we're going to go ahead, we're going to click into that. This option strategy that would be used on HIMS is going to be what's known as the cash secured put. The reason why I would want to use this option strategy is because I have no idea if the stock is going to continue to fall. But my confidence level is at, if the price does continue to go down, there's a very high chance it's going to go down to the 40 and not past the 40. Now, the other price that can be used is also, remember, I just showed you the strong level of support, which is going to be the $35 strike price. So for those of you that are more conservative investors, you could go ahead and choose the $35 strike price, because if it does break the $40 level, it's going to go down to the $35 level. Any strike price between 35 and 40 is very good. You're just going to choose whichever strike price suits your fancy based on your own personal goals and preferences. Now, with this strike price we choose, which is a $40 strike price, we're going to be paid for this option strategies because, as you guys know, we usually do option strategies on this channel that make sure that we get paid. The amount of money we will be getting paid is going to be $290, or in option terms, that's going to be $2.90. Now, for those of you that are new to options, $290 is a lot, but of even more extreme importance is the percentage return you're going to be getting. The percentage return here on this option strategy is going to represent a 7% return. So you're able to get 7% in just 30 days. So, like I mentioned, this option strategy is going to be the cash secured put option strategy. If you need a more detailed video about this cash secured put, just go ahead and search the channel for cash secured put. Now, for those of you that's willing to trade this stock, but you don't have the luxury of having a big portfolio with thousands of dollars, then this is what you could do. We're going to leave almost everything as is. We're going to make a slight tweak and we're going to move from the sell here. We're going to now go to the buy right here. Let's go ahead and select that. Now, we're going to also leave the strike price as is. And what we're going to do, we're going to select the other strike price right below that. That's going to give us the $39 price right here. Let's go ahead. We're going to click into that. We're going to hit continue and we're going to hit review order. This new option strategy that can be used on HIMS right now at the opportunities given us is going to be known as the put credit spread. The only reason I would be using a put credit spread is if I do not have enough money in order for me to do the first option strategy, which was the cash secured put. The benefits of using the put credit spread is that it's perfect if you're trading with a small account of just a couple $100. And that's because the barrier to entry is very, very low. In order for you to do this trade right now, all you would need in your portfolio is roughly $100 to be left as collateral. Now, once again, this is another option strategy. Not only is this a bullish option strategy, it's also an income generating option strategy. So once we do this, we're going to get paid. The amount we're going to get paid here is going to be $61. Once again, this is extremely high return on this. This is going to give you a 61% return if this trade works in your favor. Now, I'm not going to go into detail about the put credit spread. Just go ahead, search the channel for put credit spread. It's going to give you a detailed video. One thing I want to leave with you though is that this option strategy is known as a defined risk option strategy. That means you could lose a certain amount and no more. So in this case, the amount you could lose is going to be whatever your premium is you receive, in this case is going to be $61. You're going to subtract that from the amount of money you're going to be leaving as collateral, and that's going to be your $100. The difference here is going to be the amount you stand to lose. So in this trade, you stand to lose $39. In my humble opinion, I think that's an excellent strategy. Let me explain to you why. The reason why I think it's a really good option strategy is because you're literally risking $39 in order for you to make $61. Hence, I think that's an excellent option strategy, especially if you're trading with a small account. You have a very good opportunity here to grow your account very quickly. Also, I want to leave you with something else. When you're doing these option strategy, it does not really matter the size of your portfolio. Always make sure to trade within your portfolio. For example, I don't think it's advisable for you to be going with like 5 contracts of these things. 1 or 2 contracts is perfectly fine. Give yourself opportunity for the trade to play out. Once that happens, then you could go ahead and decide if you want to enter into more option strategies like this. Now, for those of you that are the real investors, more like myself, this is the option strategy I would be using. As you guys know, I'm more on the investor side than I am on the trader side. So I have a way longer term outlook. So if I were to trade HIMS right now, today, this is the option strategy I would be using. Also, for those of you that are not new to the channel, you guys gotta know this is my bread and butter option strategy that has allowed me to grow my portfolio. So we're gonna be going to buy, we're gonna be going to call. I'm going to go ahead now and I'm going to adjust my strike date. And the strike date I will be using is going to be June 18th, 2026. That gives me around 358 days to expiration. Yes, 358 days is an extremely long time, but there's a reason for that. Now, what I'm going to do now is that I'm going to go ahead and I'm going to choose my strike price once again below the current share price. Now, the strike price I will be going with, because this is a longer option strategy, the price I'll be going with is going to be the $30 strike price. Here's the reason for that. I just showed you there's clear support at $40. I also showed you that if the share price does break the $40 level, there's a very high chance it goes to the $35 or below. The reason why I'm going to choose the $30 strike price is because I'm an extremely conservative investor. So what I'm doing, I'm giving myself a lot of wiggle room in order for this trade to go more in my favor. So the likelihood of the stock breaking the 40, breaking the 35, and retracting all the way to the 30 is very, very low. Also, as a backup plan, I gave myself an entire year for this trade to work in my favor. So even if the strike price does go to $30 or below, I have an entire year in order for the stock to recover. Hence, I'm more an investor than a trader. I have a more long-term outlook on the stock market overall. Now, this is a buy option strategy. So with a buy option strategy, I'm going to have to pay. The amount I'm going to have to pay is going to be $22.60, or in the real world, that's going to be $2,260. And that's simply because each option contract contains 100 shares. So you simply multiply your price per contract, multiply by 100, and that's going to give you $2,260. This new option strategy is going to be known as a long call option strategy. The long call option strategy is a very, very easy and important option strategy that anyone should consider making part of their portfolio. The reason for that is that once you have this option strategy in your portfolio, you literally have to do nothing. All you doing, you have this contract in your portfolio, you're waiting for this share price to start appreciating in value again, and that is how you make the majority of your money. Now, let me give you some added information. I'm not going to give you too much detail, but just a little added information. The delta on this trade is going to be 0.81. Delta is very, very important whenever you're doing the long call option strategy. So if the share price were to go right now from $43 to $44, then your overall contract is going to increase by your delta, or it's going to increase by $81. Now, that is the power of options trading. Options give you a lot of leverage, so you're able to grow your account portfolio very, very easily. Now, for those of you that like to be very active traders and cannot just make an investment like this and sit until it materializes, There are option strategies that can be used in order for you to use this long call in your portfolio in order for you to make consistent income while you wait for the share price to go up. If you guys are interested in those option strategies, then just send me a little note in the comments below. I will go ahead and make a secondary video on HIMS and show you how you could use this to just continue generating income. So there you have it, investors and future investors. HIMS is giving us an opportunity like many stocks that came before it. If you have not yet, as soon as this video is done, go ahead and check out my video on the trade desk and also the video on United Health. You're going to see a similar setup in which I use that opportunity, I capitalize, I grew my portfolio. HIMS now has given us that exact same opportunity. So we're going to use that to grow our portfolio. We're going to use it to our advantage. If I were to trade HIMS right now, the option strategies I would be using is going to be firstly, the cash secured put. That's going to allow me to make money while the share price goes down, and it also would allow me to get the shares at a lower price if that materializes. If I am trading with a small account and I am bullish on the option, what I'm going to do is switch up the option strategy, and now I'm going to go ahead and use a put credit spread. That's going to allow me to use a lot less capital and still be able to make money while I'm waiting for the share price to stay up or trade sideways. It does not really matter. It's a bullish option strategy as well. For those of you with an even longer term outlook, I would strongly consider what I do with my personal portfolio, and that is the long call option strategy, which you just buy and you have it in your portfolio and you just sit there and wait until the share price decides to go up again. Now, for those of you that have gotten this far in the video, you guys are the real investors and future investors. Now is a good time to go ahead and like the video. Subscribe to the channel and make sure to hit the notification bell. The most important part though is if there's someone out there you know struggling to grow with a small account portfolio, then the right thing to do is to go ahead and share this video with them. Let's try to help as many as we can get away from the 9 to 5 by making some additional income with options trading. Now, until the next video, keep pushing your investments.